Have you been watching the news lately? It is confusing, right? You see all these scary headlines about tensions in the Middle East, oil prices are shooting through the roof, and yet stocks are just kind of hanging in there. It's a total paradox, and in the next few minutes, we're going to figure out exactly why. Okay, take a look at these numbers from just yesterday. The S&P 500, which is a great way to see how the overall stock market is doing, is actually up a little bit, but then look at oil. It jumped over 3%. Now, usually, a spike in oil is a huge red flag for the economy. So what gives? Why are they both going up? And that brings us to the big mystery we're tackling today. How can the market feel so shaky, so unstable, but still be rising? It feels like it shouldn't be possible, but believe me, there are some really powerful forces at work here. So let's start digging for clues.
All right, our first clue isn't buried in some dusty financial report. Nope, this one is ripped straight from the international news headlines, and it all revolves around a single, major event in the Middle East.
So here it is. This is the event that's throwing everything into a state of confusion. Israel confirmed a targeted strike that took out a top Iranian security official, Ali Larijani. Now, at first glance, you'd think, okay, that's a clear escalation. But the market can't seem to make up its mind. This right here is the perfect picture of the market's split personality. It's a complete tug of war. On one side, you have investors who are actually seeing this as a positive. They think, hey, maybe this disrupts their command structure and the conflict ends sooner. But on the other side, you have investors thinking the exact opposite, that this is a disaster that kills any chance for negotiation and is going to lead to a much bigger war. And when you have a tug of war like that, what happens? Basically, nothing. The rope doesn't move. The market is stuck in neutral. It's not crashing, but it sure isn't soaring either. It's just hovering in this weird state of what some analysts are calling vulnerable optimism. Everyone's just holding their breath. Okay, so that's the geopolitical mess, but that's only half the story. Now for our second clue, and this is the one that you'll feel directly in your wallet. I'm talking about the energy shock that's been quietly building. Just look at that number, 40%. That is how much the price of crude oil has surged in just the last few weeks. That's not a small bump, folks. That is a massive shock to the entire global economy. And here's the why behind that number. We're now seeing oil prices over $95 a barrel. A huge reason for that is the Strait of Hormuz. One of the most critical shipping lanes for oil on the planet is basically a no-go zone right now. You have to think of higher energy costs as a hidden tax on everything, and that is a serious threat to economic growth. So let's put our two clues together. You've got this intense geopolitical tug of war, and you've got this massive energy shock. And when you mix those two volatile ingredients together, you start to hear whispers of a word that sends a chill down the spine of every economist: stagflation. And listen, this isn't just some fringe theory. Here's a recent headline from the Wall Street Journal. The biggest names in finance are taking this threat very, very seriously. And that's when you know the fear is real. So what the heck is stagflation? Don't worry, it sounds more complicated than it is. It's just a really nasty economic cocktail made of three bad things all happening at once. First, prices for everything are going up. That's high inflation. Second, the economy itself is slowing down. And third, a lot of people are losing their jobs, which means high unemployment. It's pretty much the worst of all worlds. And you can probably see how our current situation starts to rhyme with that definition. Those rising oil prices, that fuels inflation. But higher costs also cause people and businesses to pull back on spending, which slows the economy. This puts the Federal Reserve in a terrible bind. They can raise interest rates to fight inflation, but that could slow the economy down even more. You can see how we already have the first two pieces of the stagflation puzzle falling into place. But now let's be super clear about something. We are not in a full-blown 1970s-style stagflation crisis right now. The biggest piece of good news is that the job market is still pretty stable. So this isn't a replay, at least not yet. But the risk is absolutely on the table, and that's what's making the market so incredibly nervous. So, with all this uncertainty floating around, what should you actually be paying attention to? Let's break down a quick, simple guide for what to watch in the coming days and weeks. Here are three key things to keep on your radar. First, the Fed's next FOMC statement. Pay close attention to their exact words on inflation. That will set the tone for everything. Second, keep an eye on volatility. The market's fear gauge, the VIX, is still high.
This is not the time to be complacent. And third, watch for any news, good or bad, about the Strait of Hormuz. That place is a powder keg, and any development will move oil prices in a heartbeat.
This chart kind of sums it all up for you. The number one, highest risk, more escalation in the Hormuz Strait. After that, we're watching for a more aggressive or hawkish Fed. And of course, oil prices breaking above that scary $110 level. Think of this as your risk scorecard for making sense of the headlines.
So here's the key takeaway. The market isn't irrational, it's just conflicted. It's totally torn, balanced on a knife's edge between the hope for a quick resolution and the fear of a massive escalation. And all the while, that ghost of stagflation is looming over the entire scene.
The stakes are clearly high, and right now the outcome is anyone's guess. So the final question really isn't for me, it's for you. Now that you understand the risks at play, how will you prepare for whatever comes next?